You've been in the job for 6 months. How's it going? Is the hiring freeze still on? Is the restructuring going to plan?
I think we're in a very good place right now. Our core franchise of being a transatlantic consumer corporate investment bank did quite well in the first quarter. Our return on tangible equity was in double digits, which is our goal. And now we have the exercise during 2016 and early 2017 of closing our non-core businesses. We now have closed or have a signed purchase and sale agreement for every retail banking operation across continental Europe. We have a signed sale agreement of our Asian wealth business. We have a signed agreement to sell our index business to Bloomberg. So all of that is in line, and we just need to execute it during the course of this year, and I think we feel good. The hiring freeze, we are reducing our headcount. We're down now, since I joined, about 10,600 people. And also, we've made significant progress in the major strategic move with respect to Africa.
So for the moment, you're happy with what you have. Will there be any more downsizing, more than what you've just told us, or job losses?
No, the perimeter of what Barclays will be is set. We set that on March 1st, and for me, that's immutable. So we need to... The things outside of Barclays' perimeter we need to work on. We will be reducing our headcount, always making ourselves more efficient. But the core franchise is the franchise that we want to ride into the future with.
Do you welcome the news that South Africa's PIC is looking at getting a big stake in Barclays Africa?
PIC was very constructive in the sale of 12% of Barclays Africa that we executed a couple of weeks ago. The large pension fund for the state of South Africa, I think it's great for them. And we look forward to their working with us as we move from a controlled position in Barclays Africa to a non-controlling position, and we'll do that over the course of next year or so.
So the next year, by the end of this year, or will it take a little bit longer? And actually, once the capital gets unlocked, what do you do with it?
Well, we gave ourselves 2 to 3 years, and we have the patience to do that. But we were very enthused by the reception we got from the sale of 62% down to 50%. The book was 3.5 times oversubscribed. A lot of institutional interest in the U.S., in Europe, and in South Africa. So we're encouraged by what happened in that transaction. But we'll make sure that we have time to do this in an effective way, both for our shareholders, but also for the shareholders of Barclays Africa.
Once you get the capital unlocked, where do you reinvest it?
You know, like we did actually, and a couple of analysts picked up on this, we have the ability to remanage our balance sheet. And because we've been so constrained with capital, we haven't been able to maximize the efficiency of our balance sheet. We did a very trade to maximize that efficiency a couple weeks ago, essentially not redeploying the risk-weighted assets, but redeploying the capital to end up in a better accretive position in terms of our earnings per share. So we do have opportunities to deploy the capital, whether it's in our card business or in corporate lending, but it just gives us more flexibility as we go forward.
Overall, how tough is it being a banker in this kind of environment, a European banker?
You know, as I said before, the financial crisis created economic calamity globally. And the banks did a fair amount to lead to that economic calamity. So we've got a lot to do. We've got to work on conduct issues. We've got to work on the value propositions. Then bank balance sheets pre-financial crisis were the cheapest real estate in finance. Now bank balance sheets are perhaps the most expensive real estate in finance. And the banks have to learn to live with the expensive real estate on their balance sheets that they've got. And that's a challenge for all of us. So there's still a lot of evolution in banking that needs to occur post the financial crisis, so it is tough.
I mean, you also need to live with negative interest rates, which seems like a pretty crazy world.
You know, we are very encouraged by what we're seeing in the U.S. with the U.S. economy, the U.S. unemployment rate hopefully leading to some degree of wage pressure, which I think you're beginning to see. And the market is beginning to price in now perhaps more rate increases. That will get to a much healthier level of interest rates, and we hope that the United States economy can act as an engine to help the rest of the global economy begin to recover, and we get to some normalized monetary policy down the road.
What's trading looking like in the first quarter?
You know, the capital markets have clearly been muted, particularly around the equities markets. But Barclays had a great first quarter on a relative basis. I think we were perhaps one of the top performing investment banks. We've done very well in the credit space, the DCM space, the leading issuer of Eurozone sovereign debt issuance in the quarter. So we liked how we operated in that environment. But obviously, all of us would like to see a more robust capital markets going forward.
Will you continue on that trend? I know you outperform from an ugly base for a lot of the competitors. Will you continue to do better than others?
You know, obviously the investment bank is a key strategic part of our franchise. We've got great people in the investment banking space, and we'll continue to operate, and we'll deal with the market as it gets played to us.
Are you any closer to appointing a new head of capital markets?
Not where we are working on it. We're talking to a lot of people, both internally and externally. We've got a great management team. Our head of retail, Ashok, is fantastic. Our credit card business, one of the fastest growing credit card companies in the United States. Amir has done a great job in terms of finance, risk, technology. We've got a great old group of friends that I worked with at another institution. So I think we feel very good about where we are on the management side, but we do have to fill that one key role. We'll do that sometime during the course of this year, for sure.
By the end of summer or not?
I think by the end of this year, for sure, we'll have someone in that role.
Give me a sense of the risks that you see out there. So we talked a little bit about interest rates, negative interest rates. You're hoping for a Fed increase in rates that would give you a little bit of, I guess, alleviance. What about China?
Well, in the global economy, we clearly have to adjust to drop in commodity prices. But I've got a lot of confidence in China's ability to manage the transition in the Chinese economy. And I think actually we're all maybe a little bit too pessimistic on the outlook for the global economy. So I don't quite see the risks there. I also, again, believe that the banking industry is so de-risked from where it was before. I think if there is a risk, it is around the amount of trading being done in the most liquid markets by institutions that have very little capital. And then the operational risk of those institutions trading through primary dealers into those most liquid markets. That's a little esoteric, but that's a risk I think we all need to keep our eye on.
But that wouldn't be systemic? Or how big
that could be systemic.
Could be.
Sure.
So that would be something that, if people don't keep an eye on, could actually bring the system down again.
I think we need to be focused on the most liquid markets and the players that are leading the liquidity in those markets, and how much capital do they have behind their positions, and then how will the market adjust if one of them get into trouble. What
will it take for investors to re-rate European banking stocks?
I think a view that we now have predictability in how the regulators will deal with banks going forward, that's probably the most important thing. So we need to believe that we are at least at the beginning of the end of the regulatory environment for European banks going forward. Then I think we need to believe that we are at the beginning of the end of the conduct issues, whether it's RMBS in the United States, whether it's PPI in the UK. There needs to be a sense that we have a vision to some predictability around the bottom line results of banks.
But on regulation, do you feel it's a level playing field between the US bank, the Asian banks, and yourselves?
You know, I think the regulators have an enormously difficult task of re-regulating this vast, complex industry, the banking industry. I know they have a goal to try to make it a level playing field between home countries and host countries, between European banks and US banks and Asian banks. It's not going to be perfect. It's not perfect today. But I've got confidence that the regulators want this to be a level playing field, and they'll make the course corrections as we go to allow that to happen.
So we're a month away from the Brexit, that UK referendum. Do you feel there's a discount on Barclays because you're kind of in the whirlwind of possible Brexit concerns?
I think for sure the markets are being impacted by the uncertainty of this vote. And it is a historic vote, for sure. As our chairman, John McFarlane, has said in his letter, our view is it's the best thing for our customers and our clients in the UK. The UK votes to stay part of the European Union. But for sure, as we get to that date, the uncertainty is going to impact the financial markets.
What does that mean for trade? It impacts, do you have a contingency plan in case Brexit happens?
No, we manage the bank to deal with all contingencies. We are very comfortable with our ability to manage any stress that will come our way. But clearly, we hope that the UK stays in the European Union.
But are you also planning, or at least is there a plan B to move bankers? Not yet.
We plan for everything.
Okay, you plan for everything. Is there a concern that actually somewhere like Berlin or Paris or Frankfurt becomes number one in the financial center in Europe if Brexit were to happen?
The history of London being one of the world's greatest financial centers is very important for the UK, very important for Barclays, obviously. And we look forward to our presence in the two financial centers of the world today being New York and London.
Just so you've been 6 months in the job, what's the question that investors ask you the most?
When will we get the stock back to book value?
And you answer?
When we close the non-core part of Barclays' businesses and focus on our core franchise, that's when I can start to have a smile on my face.
So is it difficult to put a time on it because of, again, the uncertainty that we were talking about, or is this 12 months? I know you're giving yourself a couple of years.
What we've said is that we will get our non-core risk-weighted assets down to basically 20 billion pounds by the end of 2017. That would allow us to close non-core by that date. Okay. If we can do it before then, obviously we'd like to.
Are we going to see more consolidation in the European banking industry? Are we going to see cross-border back in terms of consolidation?
I think that's a long way off. I think one of the outcomes of the financial crisis is the days of inorganic consolidation between the banking industry may be gone for decades. It used to be that the bulge bracket in the United States and world re-engineered itself every couple of years. Someone would buy First Boston, Chase would buy JP Morgan. I think those days are a long way off.
But this is because of what, regulatory concerns?
Because I don't think anyone wants to allow through inorganic growth the creation of larger banks.
Overall, what will the investment banking system actually look like in Europe in the next 2 years?
That's a tough question, and I'm not sure I have the answer to it. What I will say is Barclays is committed to the investment banking space. It's one of the 3 client segments that we want to be focused on. We like the hand that we have between New York and London. We are a citadel bank in the UK. 30% of the country's GDP goes through our payment systems every day. We have a very strong consumer business both in UK, Germany, and the US. We have more credit card users in the US today than we have in the United Kingdom. We have a great corporate bank. We have a very strong investment bank. So we like where we're positioned today.
Is it, if you're a little bit low in the investment bank, and we had some news on Deutsche Bank today, we also understand that maybe UniCredit CEO will be under pressure. Is it better for you if you're stronger on your own, or do you need better rivals in Europe?
The investment banking industry everywhere is having a difficult time. You could argue that almost no investment bank, be it American or German or British, is covering its cost of capital. Right. That's not healthy for the financial system globally. So it's not just an issue in Germany, it's an issue also in New York. If you look at the return on equities of the U.S. investment banks, you have to say that this industry is still structurally impaired.
But this is what's, again, when do we get that repricing? I mean, structurally, structural impairment is not healthy. Are we going to, does something need to happen so that we get unlocked from this?
Clearly, I believe that the answer is yes to that. We're not going to wait for that at Barclays. We're going to run our investment bank in a way that delivers the return that our shareholders want sooner rather than later.
Do you worry about deflation in Europe? And again, what that means for monetary policy and therefore the financial markets?
I think everyone has got to keep an eye on this noble experiment, but it's an experiment of running with 0 to negative interest rates. The impact that it has on the economy's long term, we just don't know. So I think we all need to keep an eye on this. I'm encouraged by what's going on in the United States right now. I'm encouraged by, pre the economic wins we're facing with this vote, what was going on in the United Kingdom. So let's just hope that the global economy begins to grow and we can leave the 0 to negative interest rates behind us.
Jes, thank you so much for speaking to us today. Jes Staley there, the CEO of Barclays.